trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, at the beginning of the week, you'll remember I told you that it would be time to cover your short positions that we sold up here in the Treasury bonds because open interest during this break here dropped dramatically and volume dropped dramatically. That means that the market was actually strengthening. And as you can see, we've now taken out these highs. We're heading up to 114.25. I just want you to show you, see how many times these swings have happened? It happened here. It happened here. It happened here, it happened there, it happened here. I mean, this is the harmonic number in the bonds, and that's what we're looking at. As we look at this on a little bit longer time frame, you'll see here we're still in a bear market. All we're doing now, as you can see, we're going back to test this same thing. You go back to the big, remember this was the big ABCD. Remember back there, that's when we got super bearish. Here's where we had the nice 3 drive to a bottom. There was the open interest started to change a little bit, and it certainly looks like we're getting ready to make an ABCD pattern right here in a bear market. That's what it looks like to me, and we're going to find out if that's the case. Now, many things happened last night, folks, because of guess what? Our old friend, the U.S. dollar. Let me get this out of the way here, and we'll see here for just a second. This is the S&P. We should start down in the S&P here in just a moment. It's been following the AI program pretty good. Well, you can see there was a larger ABCD there up at that level. Now we've been here. We should start down here. Yeah, we'll see it. Well, the next half hour when Mike comes on, we'll see what's going on here, but we'll keep a close eye on that. All right, the big one this last night, I said that it looked really bullish, was the crude oil. I said, folks, and we got Mike Moore coming on. He verified it last night, early this morning when I checked with him. There was the exact 382 from the low we made back here. That was exactly like this swing right here. If you move that swing over, you'd probably see it, that it's exactly the same swing. So that's why that works so perfectly. There was a 382 right there. So you had one there, one there, one there. It still looks bullish. It's up $1,500 from the bottom and never went 2 ticks below the number. So that's why we're watching that one here. We do that on the videos each day to try to give you a heads up of what we're watching. Now we've got a grain report that just came out. Hasn't been very friendly to us, so we're getting beat up a little bit. Not a lot, but a little bit. Not so much in the meal. You'll see here. You know, I'm not going to spend any time at this, folks, because we got a all-day trading session tomorrow between 9 and 12, and I'll spend a lot of time on that. But the main thing I want to cover here is the U.S. dollar index. That's the thing that really needs to be covered. So just give me 1 second, and I want to show you what happened to the U.S. dollar index. Boy, please tell me I kept it on here. Nope, I took it off. No, I didn't either. Let's just do we'll do the euro, and you'll see what we're watching here. There's the euro. Remember, we have a Bradley date that affects this kind of stuff, right? Okay, the ABCD on this big euro going back over the past month, okay, measured to 1639. The high was 1630. It missed it by 9 pips, and you can see we've sold off from that level. So this could be very, very important. And the reason why is if you look at the dollar index, if you follow ABCDs, which we usually do here, we're going to get this up on the daily so you'll be able to see it because it was in the news all the time this morning. And there it's already made the price objective. As you can see, there's your ABCD level right there. If it goes below 96.50, it's lights out. But all that is today is just making a double ABCD. ABCD here, ABCD here. So that's told you that that's the time you wanted to be looking to sell the euro and also looking at the British pound. As you look at the British pound coming up in here, this is real money, folks. Okay, there's the British pound. You notice that we took out the high back here. Okay, that high was 136.65. and the high today was 136. Wow, it went above it by 20 pips, folks. It took that high out by 20 pips, and now you can see we backed off a little bit. Not very much, but a little bit. There's that old high right here. You can see we backed off, virtually nothing, not even a 382, I don't believe, so far today. Same thing is happening. We've been very bearish. The yen, if you remember, the yen dollar has been going down for quite a while, and it's still dropping. And you can see here we've had the lower highs in here, but we're also starting to see here in the last days we've got the possibility of a 135 pattern here. So maybe this dollar is going to change in this area right about here. But there's higher bottoms. We'll blow it up so you can see it a little better. There's your higher bottoms coming in right here, and we'll see if that's going to hold up and make a run to the upside. Okay, now I covered the bonds, I covered the crude oil. Let's get on to some of these grains, because the first one I want to talk about is the soybean oil. Try words, Larry. When the report first came out, this was right about an hour or so ago, 2 hours ago, you'll see here the market rallied actually up to the 50% retracement of that high way back here. And what it's done now, it's sold off quite a bit. Sold off about $900. Stopped. Let's see where we are right now. I am very bullish the grains, folks. I'm probably wrong, and I might be early, but it stopped right at the 61% retracement. Okay, now we have a position in the soybean meal that's doing relatively well. It's never hurt us. We bought this at 01 and, way back here, and we didn't get out of it up here. We held it all during this time right in here. We had a chance. I believe we took some profits here and bought it back. That's what we did. We did take some profits here because of that and the big ABCD. And then we bought it back here at 06, and right now we're basically at 306, 305.60 right now doing the same thing. So we're still long the meal and we're still long the wheat, but the wheat has gone lower than I had expected, because we made $1,100 on the first run of this. If you'll remember, we made that first run right here, and we took $1,100 profit in that, of buying that low right down in here. We sold it up in here, and then we bought it back at this level. Folks, I've got to do something right now. The gold is, let me get it. Gold is ringing the bell up here for a second. I gotta do something here. Hold on a second, see, because we're getting ready to come down to a little bit lower. I'll just keep this in for one more time to see if we get in right here. I sold some gold up in here, and I'm just looking to buy it back, and that's what I'm watching here right now. As a matter of fact, doing this show and doing that gold is not too much. I got $800 in it, so I think I might just take it. Let's come on here. Come on, where we are. Let's get up here, see where it is. And the gold, we're going to get out of it at the market, and boom, and we're gone out of that. So I made a couple bucks on that. All right, and I'm not worried about this, but when I get talking, I forget. And this is right at the break, and so we're going to be talking. I could have waited another 30 seconds and been on a break, but I'm not quite that bright. Time always is elusive to me. So we're going to get back here when we come back from the break and talk more about these grains, especially Christmas corn. Okay, get this out of the way.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, yesterday, folks, we were suggesting that gold was going to go higher because you had these higher bottoms, as you can see right here. This is a 135 pattern. This is exactly 61% of this move right here. And folks, from there, it took off like a rabbit, and it went up $90 all the way up to $80 to the high right here. Now, it was measured to 34.10, but that was before we had the pullback last night. And if you'll take a look at this pullback last night, there's from your high, go right down to where the old 61% retracement right there. All right, there's your 61% retracement. And that means you also have another ABCD. So if you drew that in, you'll be able to see you're going to be right up there to the old proverbial top of the day, which was supposed to be 34.17, and it came in at 34.19. And now we are here below this level right now. And what I was expecting here, this little bit of a pullback to why I sold that, was to see if there was going to be a 382 retracement coming in here very shortly, and that would be at 3396. So I covered my short here at 02, and I probably should have waited to 3396, but we're going to put that beeper in right now, and then we're going to see if it's going to reach that, because we're very, very close to what I think is going to be a little bit of a turn here. As you can see, if you blew this up, we're getting real close, and you can see how this high was actually a low. Now, this with the low is coming in, was certainly not a high, but this was inverted, and that's why it was a really good buy down here. You had if you like ABCDs and you like gold, I mean, that's all this thing does all day long. We'll be doing that Friday on our live trading, because, I mean, a blind man could see these. Like Larry Williams says, in the land of the blind, the one-eyed man is king. So this is what we're watching here in the gold market right now. Now, let's get on to one of my all-time favorites. This is the dangerous one, folks, because, you know, if I like something really good, I'm usually 2 weeks too early. So let's get this up. That's this Christmas corn coming up here real quick. There's the daily. The report came out today. It's actually up on the day today. The report on corn was actually better than the corn on some of the others, but we've got it's actually up a couple cents right now. But tomorrow we have the live trading, and we still could get here to this level. I really believe we could still make that 428. So try to buy December chrome. That means it's 2 o'clock in the morning. Folks, you spell corn, C-O-R-N, not C-O. And I spelled, hey, look, folks, there's 4 letters in it. I got two of them right. I got the C and the O. Oh, shut the front door. Anyway, you buy at 428, stop at 418, and that makes you a farmer, hopefully. Anyway, the meal's doing okay. I still think bean oil's all right, and I still think the wheat is okay, but it's still coming down too much. Let's just take a look at it. We've made money in it. We're still ahead overall, but let's get the December wheat up here to take a look at it, because I think it's important that we keep an eye on it, because we don't want to. The one thing I won't do, folks, I'm not going to sit here and buy this stuff and see it go down, 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 down forever. I put a place where I want to stop it. Today's low was so far right on the money. There was a 3 drive to a bottom in the wheat. Okay, we took our first profit in here, which was $1,100. We bought it back at 73. Okay, our stop is below here. If you remember, I said you got to risk. We made $1,100 on it here. You got to risk that $1,100 again. Right now, you're out $350 from where we bought it at 73. So I am still very, very bullish. This I really am. You took it out. Took it out. Wow. Staying up too late, folks. Sound like somebody from Terre Haute, Indiana. All right, now there, as you can see, we're right at a really good point. This also, Bradley dates work on grains too, and if you just look at the simple cycle that's in here, and we're right over the full moon, which was yesterday. That looks pretty good. Now let's just check this to see if the moon. Let me get this out of the way here. I got to get this. This is the wrong one. Hold on. There's the one I want to get. Then all I have to do. Oh shucks, just a second here. I just have to do this one more time, and then we'll be all right. There's what I want to do. I want to put in the moon phases, so we're going to be able to look and see. Okay, here's the full moon. There might be a day off on that. Okay, there was your new moon. That was a day off on that. There was your full moon. It was a day off on that. Nothing happened here at this new moon. It just kept going lower and lower. There was your exact high. This one here was right on a low. And the last one here was right on a high. So it should mean something. But again, it's probabilities and risk control. So it's not a disaster as of yet, but that's what we're paying attention to when we're watching these things unfold. Now, we want to take a look here at I hate to bring this to your attention, folks, because it's the hogs. They're still going up. They made another new high today, folks. Let me walk through this with you on the daily, because I want to go through the mistakes that we made. Okay, we thought this was going to be the high. I got stopped out on that day right there. If I would have reversed myself, okay, I would have made all the $500 that we lost plus another $1,000 just by reversing. So when these patterns fail, that means they fail, and I'm wrong, and the market's right. The market's always right. Now you can see where we are. We're almost back to the old highs from May of that was April of last year, when we hit the high was 109.65. And guess what? Today, folks, the high was 109.62. So it missed it by 2 ticks of taking that high out by just a little bit. So if it's wrong, and it certainly looks like it could go a tiny bit higher, but this is getting close in these hogs, but no cigar yet. So I want to wait a day. We got maybe tomorrow, because we got live trading tomorrow. Might give us a pretty good chance. If we look at this on a real short-term basis, let's go to the hourly. Oh, you can see there's where we are. That's the number I was watching there. Okay, well, we'll see. We'll get a shot at it tomorrow to see what happens. Okay, now we got to take a look here at this stop and peak, because I still have a position in on that. And there's where we are right here. Okay, I just sold the S&P right here, folks. This was the old high. I sold it right here at 45. Okay, my stop is at 65. All right, I have to risk 20 cents on this. Well, I shouldn't risk 20 cents because it's a 2-minute chart, but that's what I want to risk, because all the other things are going good, and I really believe that we're not going to take those highs out from yesterday. I really believe in these Bradley dates. Maybe too much, but that's the way I do things. Sometimes it's good, sometimes it's bad. You never really know. All right, what did I miss? I'm missing something that I wanted to cover. I covered the bonds. Let me double check. Hold on just a second here. Mike Moore will be our guest here in a little bit. He'll be talking to us about the market in the crude oil. He's been a big help to us. Remember, just a few weeks ago, he was back on there. Just, I think it was about 7 or 8 days ago, right back in here. He was really bullish this stuff. And here we are 5 days later. We've had this run right here, and it still looks good. I mean, look at it. There was a 382 retracement here, a 382 retracement here, and a 382 retracement there. Boy, you got to watch 382s and real strong, either up or down. If the stock market ever goes down, it might do something like this. Who knows, for God's sake? Who knows? Okay, we'll be right back with Mike Moore.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we have Mr. Energy Specialist in the house, Mr. Mike Moore. Mike, thanks for telling us about oil going higher 8 days ago, because it hasn't had a down day since.
Thank you, Larry. Thank you for having me on. I appreciate it.
Well, you give us good stuff. You're welcome all the time. How much higher are we going, buddy?
Okay, you want me to jump to oil or do natural gas first?
Oh no, let's do oil first because we're not. We have position in the oil, but not in natural gas. So let's do the oil and the what do you call the other one, Brent, and then we'll go to natural gas.
Okay, so the oil, we held exhaustion below at 55.45 with the 55.30 low, and it rallied $13.99. And then on May 6th, we also left a minor bullish reversal below. Then the trade above 59.07. I said projects us upward $1.60 minimum, 5.50 plus maximum. So we've seen 10.22 of that so far. And then at 5 on June 9th, we also left a moderate bullish reversal below, or a medium bullish reversal below that warned of higher trade for days/weeks. And we're 5 weeks into that. And then the trade above 60.87 has brought in $8.42, and then the trade above 62.19 has brought in $7.10. And that was the minor bullish reversal below talked about in here, the medium bullish reversal below talked about here, and then breaks above this formation right down in here and breaks above this formation. So now I would just show real quick, there's a couple things. I don't necessarily have a formation up on the upside that's really critical in here to pay attention to, but in the RBOB, or unleaded gasoline, there's a large formation right here that comes in at 218.56. Bear with me a second. I'm going to jump around a little bit here because I'm just trying to.
That's okay. Yeah, hey, we can understand what you're doing, so just take your time.
So that comes in at 218.56. It says 218.47 right now because that was written early this morning. But right now at 1 o'clock, excuse me, no, that's wrong. 1 o'clock. At 218.52, excuse me, plus 1 tick per hour. Decent break above there will project this to the upside further. But if we break above there and back down through it decently, I'd be out of all longs short and looking for this to come off. And that also might be the last stretch of this move upwards. So I'd be paying attention to the RBOB because down on this page, I have RBOB as the plus symbol right there, meaning that is likely to lead the charge today to the upside. I'm just double checking something. You can see the heat crack is down and the RBOB, well, the RBOB's crack's down too also. So that kind of switched during the day. So never mind that. But going back to the RBOB, just to get back to the normal summary of it, the trade above 196.64. Oh, I wanted to highlight this. The trade above 196.64 is something we talked about on the show a number of weeks ago. That was the trade back above this major formation on the daily continuation charts. We'd rallied up here for a couple weeks, pulled all the way back down, rallied up, pulled back, and I think we're going to start making some new highs from that fairly soon. That was the 196.64 level. We saw 22.62 cents of that from that on the upside in previous contracts. I'm not going to go all these other things, but we held exhaustion below in the current contract at 199.26 with a 199.43 low, and it rallied 19.55 cents. And also additionally got bullish above this line, pulled back, and we rallied up here. I already talked about this line above, so I won't talk about that again. But if we take out this line below, which is well formed, that's going to come in at 209.43 plus 4.6 per hour starting at 1 o'clock p.m. Eastern Standard Time. And a decent break below there will project this downward 10 cents plus. Likewise, if we break it below there decently and back up through it decently, I'd be out of shorts and long. And the heating oil, I've been trucking to the upside too. This was leading the upside a bit, not today, but the trade above 202.22 has brought in 19.83 cents of strength. And then we had other levels above 204.18, 207.56, 210.46 was the more recent one. Those were the breaks above here, 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 and here. If we were to fall back down through this line decently, that would warrant decent pressure. That's going to come in at 209.11 minus 1.4 per hour starting at 1 o'clock p.m. Eastern Standard Time. I would also note that we have a formation above. That comes in at 221.55 plus 1 per hour starting at 1 o'clock p.m. If we were to break above there decently and back down through it decently, I'd be out of longs and short. And one other thing I would just note here is this may be in the last stretch of this move here up because we're basically holding this one exhaustion level. Just something to note. There isn't really a clean line to line up underneath these. I mean, you could whatever.
Yeah, it's
if
been
we start
straight
making
up.
too much headway down into here, I think that this is going to start dumping.
Okay.
And the Brent, this is rallied also. Trade above 61.75 is brought in 9.08 of strength. And then we had additional levels to be long above at 63.29 and 67.45. And then we have a fairly significant formation above here. That's going to come in at 70.57 minus 0.3 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time, and a decent break above there will project this upward at $1.75 minimum. It could have a maximum of $12 plus, so I would keep an eye on that. And a failure below this formation right here, which is going to come in at 67.58 plus 2 per hour starting at 1 o'clock p.m. That will project this downward $3 plus. And then I'm thinking you're going to go to commercial break any moment. So,
well, you're right. You're very, very close. You want to use my clock? I'll tell you.
That's all right.
I haven't got it turned on. Just a second here. I get too excited watching these charts and I forget to turn the darn thing on. Let's see how we're doing with the clock here. We've got 1 minute. Then keep going. We've got 1 minute to go.
We'll go over the gas oil here, and then we can jump into the financials after this.
Yeah, that natural gas very interesting.
In gas oil at 567, and we've rallied $88 in there with additional levels to get bullish above here. This one I didn't call getting long, but nonetheless, it's run up anyway. If we were to break above this formation above here, that's also going to further project this to the upside. That comes in at 652.81, minus 3 per hour starting at.
Got to pay a few bills, and I'll be back with Mike more analytics, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hey, we're back, folks, with Mike Moore of More Analytics. Please continue, Mike.
How are you, Larry? Okay, thank you. So we were talking about the gas oil. We do have a formation above. That comes in at 652.81. minus 3 per hour starting at 1 o'clock p.m. And it just has a minimum projection of $12, but the maximum projection could be far more substantial to the tune of $100 plus. If we were to break above there decently and back down through it decently, I would look for decent pressure to come in. And let me jump to the natural gas quick. The natural gas has continued to come off. We've been bearish since last week. The trade below 374.50 had brought him trade down here to 345.30 with other different levels to get short below as well. If we were to trade above this formation right here, which is going to come in at 374.90 minus 0.6 of a tick per hour, starting at 1 o'clock p.m. Eastern Standard Time, that will project this upward 265 ticks minimum, 1,000 ticks plus maximum. If we were to break below this formation below here, which is going to come in at 34.54, that will project this downward 180 minimum, 350 plus maximum. But if we break below there decently and back up through it decently, I'd be out of all shorts, long, and looking for this to rally. And that would also be an ideal situation because if we broke below there and came back up through it and you got long, it's not a projection to the upside, but there's good likelihood we could run up to here. So you'd already be long from down here and then could add on to your longs on a break above this line. All right, you want to take a look at the S&P? Do you have any questions on the energy?
Well, I don't know if anybody has. Of course, the S&P. Yeah, please.
Let's see.
You probably run out of paper if you're trying to find where the high is because it keeps going up and up and up and up. So please continue.
Yeah. So the S&P, we've been bullish from the overall on a lot of these levels, so I'm not going to go over those. But the trade above 54.09 and a quarter has now brought in 665.5 points of strength, and we had other levels to get long above 55.94.50 and 56.58 and 60.04. Now the 60.04. Okay, that was the break above here. And I warned that this might have a run for the December highs, which we did not see. But it did run up to 60.74, rolled over. Mm-hmm. And let me just double check something here. Actually, no, that did not negate this. So what we did do, though, is we broke below this formation right here decently without breaking below this formation decently. and then we broke back above this formation. So this now warns of a run right back up through these highs of 60, 74, 75. But since we did not take out this formation, the likelihood of this still running for the December highs of 2004 is strong. And I would think even stronger now since we still held this lower formation. If we were to take out this formation on the downside, which is going to come in at 60.0904 plus 8 per hour starting at 1:30 p.m. Eastern Standard Time, that would warrant a decent pressure, likely for days/weeks. Right. And then the gold looks like we're
Mike,
leaving a gap. Yeah.
Mike, we've had a question. Could you repeat that on the S&P? Going below would be downward pressure for.
Yep. Yes.
What was that number?
That number right now at 1:30, that number is going to come in at 60.0904, and that increases 8 per hour. And a decent penetration below there today is 23.75 points.
Okay, great.
The gold looks like we're leaving a gap higher today on the day, or we already have. It's already closed, so that's bullish. It's really been chopping around in here the past couple of days with some pretty wide volatility. We had held, let me just back up, we had held exhaustion up here and then broke below this formation, came off and then held this other old formation we'd broken above here. And we've just been traveling up above it. So now that's on hold. Obviously, we're so far above what entry would have been here. It doesn't really matter anyway, but we still haven't taken the line out nonetheless. But this line right here that we broke above, that actually has projections to the upside of 72 minimum, 225 plus maximum. And so we've seen 75.7 of that already getting the minimum, but the maximum still has a ways to go. So if we further see a decent break above this line, we might start to see more of that come into play. That's going to come in at 34.16 even plus 5 per hour starting at, I have that line in the wrong place. At 120, that line comes in at 34.1240 plus 5 per hour. And a decent break above there will likely bring in strength probably for days. If we were to roll over and take out this formation below, which is going to come in at 33.50.60 plus 4 per hour starting at 1:20 p.m., that would warrant a decent pressure. And then this line below here is even more substantial. That comes in at 33.37.50 plus 2.4 per hour. And that would project this downward 70 minimum, 120 plus maximum.
Okay. Mike, we have a request. If you could repeat the natural gas, please.
Natural gas is presently bearish. Hold on, let me just pull this up. Sorry, I closed that sheet just a second. Okay, so the natural gas, get this. Right, the breakdown below 354.40 is going to project this downward 180 points minimum, 180 ticks minimum, probably 350 ticks plus maximum. But if we break below there decently and back up through it decently, look for decent short covering to come in, and I'll likely run back up into here. Bear with me a second, and I'll give you that number in a minute. A decent penetration below there is going to be 63 ticks today up until 2:30.
Okay, good.
Okay. And lastly, I think we had, did that answer the question?
Well, that answers that. Listen, we're going to have you on and again in about 6 or 7 days. Okay, pal?
Thank you very much for having me on. I appreciate it.
Yeah, by the way, Mike, anytime you see something special, we have room for you. So let me know.
Thank you, sir. I appreciate it.
You got great work. Mike Moore, More Analytics, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Somebody watching the show asked me to talk about this thing that I'm looking at. Folks, when I'm looking at this, I'm just looking at numbers and time and price. That's all I'm doing. There's no astrophysics, nothing. These are just the natural occurring things that happen to gold all day long. This is the harmonic number, folks. This doesn't change. Look at today. There's your harmonic number there. There's your harmonic number there. There's your harmonic number there. Missed this one by a little bit, but it was pretty close. There it was on the upside. You can see it. That's where I was selling it, okay? But that's what that is. Now, these key times of the day comes out of the Floor Trader's Handbook. If you go back and look at the key times of the day, these are super key times of the day. But it doesn't do the same thing every day. It skips a beat. So what's happened on Thursday, you go over to Tuesday. And if you went over to Tuesday and look and see that the key time of the day on Tuesday was probably right up in here somewhere. You don't know because it shifts. It skips a beat. That's what all these numbers are about. This thing on the bottom here chart is a relative strength, and that was given to me by my good friend Teresa. And when this thing turns up, okay, when you're over a harmonic number, that tells you to go long and you stop below it. And you want to go short when it turns down and you put your stop above there. That's all that's trying to do. Sometimes it's wrong, but more than less, well, here was the bottom. You can see how the bottom turned right there? That was right off the bottom, right? That's what I was covering here at 01. And now it's up to this level right here. That's all that is, folks. It's nothing fancy. You could do this by hand. It's harder to do by hand because it's got so many numbers and you can't follow many markets. That's why I usually look at gold and crude oil and Stop and P and a few of the others. But that's what I'm watching as I'm going through looking at these things right now. The key today, watch, folks, is this right here. If we get up here in the Russell, I would highly recommend to sell the Russell at 2150 with a stop above here. And who knows what's going to happen tomorrow? It's a Friday. Live every day in an attitude of gratitude, and may God bless.